Sales Manager for Long-Term Care and DI. I'd like to thank
The broadcast is now starting. All attendees are in listen-only mode.
I'd like to thank you for taking the time out of your busy day to join us this morning. And with me today is Rick Cordaro. Rick is our Regional Vice President for Disability Income with the Principal Financial Group. And Rick's going to be talking to us today about Principal's DI products, where the product fits into your marketing efforts. I think you'll have some great sales ideas for us and ways to begin that DI conversation with your clients. So with that being said, I'm just going to go ahead and turn it over to Rick. Thank you, Rick.
Thank you very much, Tim. Well, good morning, everyone. I have a lot to go over, but what we want to do today, and take notes because I'm just going to hit a lot of different points on creating opportunities with income replacement. And what we want to do is, as this says here, the very first screen, it says we want to make it as easy as we possibly can for you in understanding the concept and how to incorporate income replacement in what you're doing. Let me get this. Oops. Let me make it work here. There we go. There we go. But first of all, a lot of people say, Rick, who's your competition? What do you see in the marketplace? And I'll be quite honestly, and I've talked to my counterparts in the business, people who work with other companies, and it's really, we are not competing so much as you may think with other companies or other carriers at all. What we're competing with are the things that either you have on your plate as an advisor in like annuities and long-term care and life insurance and investments and 401ks, but more importantly, dealing with the client, their time and budget constraints and understanding and their lack of confidence around making financial decisions. And this seems to be the biggest problem because many people don't have the ability to understand the unintended consequences of becoming sick or hurt. And so we think there's an enormous market out there. So what you want to do is get yourself prepared mentally, because we think not only is it's the right thing to have that discussion with your client, but the income potential is enormous. But what you want to do before you go out and visit with an individual is have a mentally prepared concept, or even write it down and to talk about the need for income replacement, the product solutions, and talk about the affordability of our premium. When you compare our product to other products, you'll find that our premium is really not, in comparison, is not that bad of a value. But first of all, what we want to do is focus on the need for income replacement. And as this pyramid indicates, there's a lot of things and a lot of things people do through their life cycle. And typically before they begin a retirement plan and personal savings, they usually buy a car, they buy a home, they buy life insurance, they have health insurance, and these are the things that are on the bottom of the pyramid that when you look at it, these are your fundamental ways of protecting and creating a defense for your client. Obviously, car insurance. I mean, everybody understands the need for car insurance. They could see it, feel it, and not only that, I mean, many times the state requires it because they want to have that sense of responsibility. Okay, and the same thing with property insurance and health insurance. You wouldn't think of living in our environment today and with things that are going on. How could you go without having health care? Okay, and obviously with ACA, it's something that people are required and mandated to have. And then as they go through their life, they start acquiring assets through retirement savings, maybe owning a business, saving for retirement, or saving money for incidental things like maybe a new car, a new second home, the children's education, all these things. And as they get on in life, what they want to do is protect those assets by passing them on, those personal and or business assets, to either the business partner or their families. But the one thing that's important, one thing that's most important in this equation, in this pyramid, is that nothing will happen until that individual gets up every day and goes and earns a paycheck. And this is what we're talking about. We're going to focus on the need of protecting that most important paycheck. And when you look at saying, well, what are the chances of this happening? I mean, you talk to younger people, they go, really, I don't know of anybody who's sick or hurt. Maybe Uncle Joe and Aunt Millie, but they're 90 years old. I just don't get it. But when you look at the chances of at least one long-term disability lasting 3 months or longer before an individual reaches age 65, there's a 1 in 2 chance. If you're under 30, there's a 50-50 chance that you're going to suffer a long-term disability lasting at least 90 days. And when you're, I mean, look at the numbers. At 40, it's still pretty high. And so the probability is high, but when you look at the longevity of these claims today, you know, if you're 35, again, you're in that 50-50 range. 50% of the claims that go 90 days are going to be what I consider career-ending. These are type of sicknesses or illnesses or injuries that are going to keep that individual, your client, from being able to go to work and have an actively involved type of lifestyle that includes working and earning an income. And where do disabilities come from? These are our actual numbers based on 2011, and since over the years they really haven't changed that much. But you know, when you look at the causes of disabilities, it's important to understand that most individuals believe, when you ask, to say, hey, how are you going to become sick? I mean, you know, when you think of a disability, ask your client, when you think of a disability, what's the first thing that comes to your mind? And if for whatever reason you were to become disabled, how would you think that's going to happen? And most of your customers are going to say, well, it's probably going to be an accident. I'm going to fall off the roof while I'm cleaning, you know, taking down Christmas lights. I'm going to get hit by a bus. One of those, you know, the hit by the bus thing. About 2 months ago, we got an email from one of our claims people who's been with the company 28 years. And she just thought it was like to let everybody know that in her 28-year career with Principal, she finally got her first person who got hit by a bus. And so we thought that was kind of cute. But yeah, again, injuries only represent 9 to 10% of all disabilities today. That other pie is absorbed by illnesses. And one thing that I want to point out to you is the lower right-hand side, the mental, nervous, and substance abuse. That's up to 18% today. So these claims are on the rise, and we think that's something that, you know, in today's world, mental, nervous, alcohol, and drug abuse is real, and people do become sick or hurt because of it. So let's start talking about when you're sitting there with a client and you're having a conversation. Maybe you've discussed maybe money in their 401k. Maybe you've talked about long-term care with a younger customer. Or maybe you've talked about life insurance or saving for children's education. But here's some of the things, and you can just take these down. I will send you these if you want. Just call Tim at the financial brokerage. We can get a copy of these to you, these slides. But you know, just maybe have this conversation with your client. Say, hey, what's the most important asset that you think you own? And then they'll say, well, if they're a younger person, they're going to say, well, probably my car. You know, if they're in their 40s, it's probably going to be their home. Or if they're in their 60s, obviously it's going to be their retirement plan. But we're talking about those people under age 50. And when you sit there and you say, listen, what's your most important, most valuable asset you have? And then you take their income and you multiply it by the number of years they have to work with some type of modest growth, and you look at the dollar amount of $6 million, $8 million, and you help people say, don't you think this is a pretty big asset? And what are you doing to protect it? And and when you ask that, so what would you want to happen if you became too sick or hurt to work? You know, what is your plan? It's a real simple concept. There's just, hey, if you became sick or hurt today, what's going to happen? What is your plan? What do you have planned for your family? And when was the last time you looked at your income protection plan? And another one I love is, you know, hey, how do you plan to pay your bills? You know, what are you going to do for this? And how is this going to work? These are conversations that we think are so important for you to have with your customer. Each and every person you talk to, anybody under age 50, have that conversation and say, listen, if you became sick or hurt today, what are you going to do? What's your plan? And, you know, they don't know anybody who's disabled, but I will tell you this much, the single largest minority in America today is the disabled American, according to the U.S. Census Bureau. So, I mean, when you think in terms of they don't know anybody, well, they must not get out very much, because that's the single largest minority in the United States today is the disabled American. So when you look at what are they doing with their money? You know, just put it in real terms. Help them. Maybe we call it a budget. Hey, how much are you paying for your house, your car, your family, your gifts, cable? You know, I mean, cable, internet, and cell phone. I mean, that right there equals the amount of money that, you know, when my wife and I bought our first home, people are spending more on cable, internet, and cell phone than we paid on our first home, our house payment. It's crazy. But, you know, and think in terms of these people saying, well, listen, are you willing to give that up? Because you have no money. What are you going to give up? And some of these things they have to give up, okay? You can't give up your health insurance premium. That's mandated by the government. You have to have that. If you're going to have a car, you have to have car insurance. You're not going to be able to keep the house if you don't make the house payment. So just take a look and say, okay, if you did become sick or hurt today, what's going to happen, and let's just take a look at the real numbers. And then ask them, do you agree that it makes sense to protect your ability to work and earn an income? Of course it does, because this is the goose that's laying all the golden eggs, okay? So let's talk about the solution. Make the product in a way that a lot of customers, they think it's too complicated. The problem that we have is we think most advisors today think the product is too complicated. And we've boiled it down to, if you're able to answer 5 questions, okay, and bring up 5 answers for them, and say it in a word that resonates with your client, okay, and that you can clearly understand, we think it's going to be easier. Now, let's just go through the questions. Number 1, when do I start receiving my benefits? And that's the waiting period, the elimination period, and that's kind of simple. If you have a 90-day elimination period, which is the most common in the industry, you just simply say, after 3 months of a disability where you're sick or hurt and not working, or you suffer a loss of income, that's the waiting period. Then after that, you go on the clock with the insurance company. So 30 days later, you'll get your first check. So if you have a $7,500 monthly benefit and you become sick or hurt today, your first check you would get from the company would be roughly 120 days from now. And that's it. I mean, let's just make it real simple. Boom, 90-day waiting period, you've got it. The next question they want to know is, when I do satisfy my waiting period, how long will you keep paying me? And that's identified with the benefit period. The most common in the marketplace today is an age 65 benefit period. You can go to age 67, you can be age 70, but simply just say, listen, if you satisfy the waiting period and you're collecting benefits and you're one of those 1 out of every 2 disability claims that are going to be career ending, we're going to pay this benefit to you through age 65. Now, the average duration of a disability today is about 31 months. That's on average, okay? A lot of them are shorter, a lot of them are longer, okay? But obviously the question they want to know is, okay, I've satisfied my waiting period. I know that you're going to pay me to age 65. My next question is, how much are you going to pay me? And that's the benefit amount. We're going to pay you $7,200, $7,500. Whatever that amount is that you purchase is the amount that we're going to pay. And then the next question is, how do I qualify for benefits? And that's under the definition of disability, which we'll talk about a little bit longer. But the last thing they want to know is, how much is this going to cost me? Okay, what am I going to pay in premium? So it's really easy. Got a 90-day wait, we'll pay you to age 65. We're going to pay you $7,200 a month. I'll talk about the ways you qualify for benefit, and it's going to cost you $190 a month a premium. I mean, that's what they want to know, and that could be dealt with and explained relatively easy. Okay. The principal product is a non-cancelable guaranteed renewable, meaning that the policy can never be changed, modified. We can never reduce benefit, nor can we ever increase premium. From today, the day that person starts his policy, that's the day the day they pay their first premium, all the way through age 65, and it all remains the same, and everything they have remains portable. If they get a discount for whatever reason, that discount is permanent and portable. They keep it, and they keep it for the rest of their working career. And so that's the beauty of what we refer to as a non-cancelable and guaranteed renewable policy. And any changes in the contract have to be driven by the customer, by your client. And again, the policy will pay in 5 different ways. Now remember, we talked about the waiting period, we talked about the benefit period, we talked about the benefit amount, we talked about the premium. The next question, and this is where, how do I collect benefits? These people can collect a benefit in 5 different ways. And let's talk about total disability. Total disability is kind of easy. You're sick, you're hurt, you're not working, okay? You're unable to perform the substantial material duties of your occupation, you're not working, and typically with a claim, you got to understand that they have to be under the care of a physician as a result of a sickness or injury. That's the given for every total disability or any type of disability. The next type of disability is that they can collect if it's not total. It may be a situation where they have a sickness or injury where they've lost income. Our contracts, or when you add the residual and recovery benefit rider to a policy, they no longer become a total disability policy. They become a loss of earnings contract. So once that individual loses 20% or more of their income as a result of a sickness or injury, now this doesn't mean they may never skip a day of work. They may never have lost a day of work. But it could be a situation because that sickness or injury, their income dropped by at least 20%. And we can see that in a lot of the professions that we work with. So once they lose 20% or greater of their income, the benefit amount that we pay them is going to be directly proportioned to the benefit or to the percentage loss. So if they lose 45% of their income, we'll pay them 45% of the benefit. So if you have a $10,000 policy, we'll pay you $4,500. Once that individual loses at least 75% or more of their income as a result of sickness or injury, and this will happen for high-income earners, they can lose, if you get a person making $400,000, $500,000, $600,000 a year, where they lose 75% of their income, that's not unheard of, but they're still making $100 to $125, we'll still pay them the full benefit as if they were totally disabled. Okay, and then the recovery benefit just simply says that you may have recovered physically and or emotionally from your disability, but we're going to continue paying you a benefit as long as until you reach at least 80% of pre-disability earnings, or your loss of income is at least no greater than 20%. So we think this is a very, very strong definition of disability. And the next one is a catastrophic disability. And this is just like the word implies, where an individual has a disability that is catastrophic in nature. So you take the disability income monthly benefit, and this is an added benefit. This is in addition to, let's say they were making $10,000 a month. We gave them a policy for $6,000 monthly benefit for total disability and residual disability. Now the catastrophic would be an additional $4,000. When added to the $6,000, these two dollar amounts equal 100% of pre-disability earnings, and they can collect this disability catastrophic benefit in one of three different ways. One is that they are collecting based on the loss of, or they cannot perform 2 of the 6 activities of daily living, as in the box on the right indicates. And we all understand activities of daily living. We see that in long-term care. Now you understand that in order to be able to collect this, we know that their sickness or injury that they had was catastrophic in nature, meaning they're going to have to take, they need in-home health care. Maybe they're in a rehabilitation program, or whatever the situation may be, that the disability is catastrophic in nature. In addition to that, they may have it adds into that the cognitive impairment. So you have an individual who has a cognitive impairment. They're not only getting the base benefit, but we know that because of that cognitive impairment, there's going to be added expenses to their daily living lifestyle. Okay, maybe bringing home a caregiver, or sharing the caregiver responsibilities with the working spouse. That spouse still needs to go to work every day, okay, the surviving or the healthy spouse. So there's a lot of things. And then the presumptive disability. So it could fall into one of 3 things, the ADL definition, a cognitive definition, or a presumptive, which is nothing more than loss of sight, hearing, speech, or use of 2 limbs. So that catastrophic, I love this benefit. It's a terrific benefit, and a lot of people can relate to this, okay? And then again, it just pays up to 100% of pre-disability earnings, up to $8,000 additional a month. The presumptive disability is a unique benefit. It says, now, if your client loses sight in both eyes, hearing in both ears, speech, or use of any 2 limbs, this is a benefit that's paid that basically says we waive the waiting period. So if you have a 90-day waiting period, we waive that, and you'll start collecting your benefit 30 days from the date of the occurrence. The benefit period, if it's an age 65 benefit period or greater, then that benefit period then becomes a lifetime benefit for your client, and then the benefit is paid regardless of any other earned income that individual may have, so they can go back to work, working as much as they were before, earning equal to or greater than the amount that they were. So let's take an example. You got an individual who's driving down the highway, involved in an automobile accident, and let's just say he's an attorney. Okay, he's driving down the highway, and he has involved in an automobile accident, and he's paralyzed from the waist down. Hence, he lost the use of 2 limbs, two legs. So we lost the use of 2 limbs. He's paralyzed from the waist down. He goes into a wheelchair, recovers, goes to rehab. He's collecting the full benefit from the date of the occurrence, and he goes back to into his legal practice, making as much money, maybe even more than what he did before, but we're still paying him the full benefit amount up until the day he dies, regardless if he's gone back to work. So we think this presumptive is a pretty unique benefit. And then there's a capital sum benefit. If you have an individual who actually loses an eye, and hand, or a foot, we'll just pay them 12 times the monthly benefit, and that's paid to them in cash. Again, no extra premium, just like the presumptive. This is a built-in feature that they'll get the benefit in addition to any monthly benefits that they receive. So Now we've talked about the product and we've talked about the things that really resonate with the client. How long do I have to wait? What do I get? How do I get it? When do I get it? And what is it, what's it going to cost me? And so you just want to close on the product. And when we talk about closing the sale, our obligation to you will always be that you present and we propose the largest amount that they're eligible for with all the required or optional riders that we think are appropriate. And this is the way we do business. We want to cover your backside, that in case something happens, you have in your file that you at least showed your client the maximum benefit they could get. Okay, but what if they don't want it? Okay. And what if they're in a situation that they say, well, you know what, I can't afford the 7,200, or my wife and I, we've been thinking, and we only need 4,000 a month. Well, that's great. Then we always revert back to that and create a plan design that fits and is appropriate and relative to the client that you're working with. And then got to be always ready for that situation where the client says, well, you know what, I think I want to think about it. And of course, what is there to think about? What's going to happen tomorrow that changes your financial condition today or your financial circumstance today? What's going to happen tomorrow that's going to take away and get rid of that obligation, all these future financial obligations you have, that if you become sick or hurt tomorrow, why is it different tomorrow than it is today? And you got to ask those questions. So when you look at alternative benefit designs, you can think in terms of maybe reducing the benefit period, maybe extending the waiting period, taking off a cost of living or catastrophic benefit, maybe taking the residual and modifying that, or modifying the O&O definition. I mean, you can see what the benefit with the principal product is, that we have what's referred to in the marketplace. It's as unbundled product, meaning we can take any feature, benefits, we could just move this thing every which way but sideways and come up with a cost or a premium that is something that your client could they can afford. So talking about that and helping them understand that, you know what, this is what we recommend, obviously, but let's work backwards and find out what's going to fit, A, for you as far as the benefit amount, and B, what's going to fit for you as far as the premium. There's no use in selling something to an individual that they can't afford, and they're only going to drop it after they've suffered through paying 2 years or 2 months or whatever of premium. That's just not right for them. It's a waste of money. It's a waste of your time, a waste of our time. It does no one any good. So let's talk about overcoming objections. Obviously we don't want to pay for things we're never going to use, okay? But then again, when you look at this and you say, okay, well, how many times has your home burned down? That's just throw those things out to them. What you got to do is kind of take those objections that they have, and one of the things is they don't want to make a mistake of, the big mistake is what? Or there's a little mistake. We think the little mistake is paying the premium and never collecting the benefit. And really, I don't think anybody buys a disability income policy with the intent of becoming disabled as much as I think nobody buys a life insurance policy with the intent of dying too soon. I think it's all about transferring the risk, financial risk associated with death and dying, to an insurance company, because obviously that's what we do, and that's the type of business that we're in, is we're helping people transfer risk to insurance companies. But when you think in terms of mistake, we think it's a small mistake, really, in relative terms to the big mistake that would happen if you didn't have this and you did become sick or hurt. Okay, and when you talk about it, just as you're going through the process of talking to an individual and they're shaking their head up and down, always go back to the sense that we did agree that your income was important, didn't we? We did agree that you're not going to send your children to college unless you're working, correct? We've also agreed that your retirement plans are not going to look as good as they do today unless you keep working to age 65. I mean, remind them what that income is for. Remind them why they're doing what they're doing, or remind them, hey, why do you get up every day and pull out of the driveway? What are you doing? Okay, and the bake sale. We talk about the bake sale process. Bake sales are great. We think, what it does for people and communities, it brings together community, it brings together people in a really, really positive way, based on some type of tragedy or something. And we understand that. But, that's not a good plan. I mean, you can't sit back and say, if I have cancer, or if your client has cancer, and they call you and say, what are we going to do? You say, listen, I think we ought to have a bake sale. I don't think that's an appropriate answer for you as a professional advisor, to say, listen, I think we should have a bake sale. It's just not the way to go. And when you look at how much are you paying for your homeowner's insurance versus the value of the home, let's say your home is worth $500,000, $500,000, and you're paying X amount of dollars. Well, what's your income worth? 7, 8, 9, 10, 12 million? I don't know. Let's put it in relative terms. Same thing with your car. What's your car worth? 12, 18, 24, 50,000? Your income's worth 10 times that amount each year? Okay? And so just take a look and put things in real-time perspective that people can understand. And it's never going to happen to me. You know, I'm not going to ever become disabled. Well, no one ever plans on becoming disabled, but having known anyone who's ever had cancer, heart attack, you know, when you look at 93% of disabilities are in situations caused by some type of sickness as opposed to a disability caused by accidents, you never know what's going to happen. 1 in 4, 20-year-olds are going to become disabled to 90 days or longer. We average, our average is 4.8 years for a claim, okay? And 52% of our claims last more than 5 years. So when you look at our claims and the type of things we write people who are typically people who take a shower before they go to work as opposed to people who come home from work. But our clientele are business owners and professionals. So I don't need it now. Maybe I'll buy it later. You know, one thing we do know is that if you wait and buy a policy 10 years from the date of from today, or even 5 years from today, the money you're going to pay between then and age 65 is going to be greater than the amount of money you pay now between now and age 65. It doesn't get less expensive. And there's the other thing, too, that always could happen, that your client could become sick or hurt in the meantime. If you became sick or hurt tomorrow, today you have the option of being able to purchase it and being able to purchase it in a favorable way. Tomorrow things may change. You know, it may not be that way for you tomorrow. Something could happen where you can have some type of sickness or injury that precludes you from being able to ever purchase this product again. So let's talk about underwriting. What does it take to be able to purchase a policy today? Today, the purchase of disability income insurance is much easier, more streamlined than it ever has been, okay? Honestly, I tell you, we compare the time that an application comes in for disability income and an annuity, and our disability income application is processed and we come out with a policy faster than our annuity people do. I mean, that's how quickly we're doing it. So basically there's things we want to understand, okay, the things that determine what a person is going to pay, and the biggest thing is their occupation. You're going to find that the principal, when dealing in certain occupations, we're extremely strong and relevant to individuals who are professionals. These are physicians, you know, attorneys, dentists, you understand, the pharmacists, the engineers, the architects. We're extremely, if not the best priced product in the marketplace for these people, but where we've changed the game, where it's a game changer for us, we call it, is in the small to medium-sized business and the business owner, okay? You get a business owner, we don't classify that business owner based on the occupation, and we don't classify them based on their industry they're in. We classify them as a business owner if they have success, they have stability, and based on the size of their company, we can give them, we've taken an individual in an industry that typically is a blue-collar industry and very hard to write. We took that business owner from a 3A to a 6A occupation based on our new occupation guide for business owners. It's unbelievable, and like I said, in the marketplace, it's a game changer. And people are looking at us saying, scratching their heads saying, why are you guys so aggressive in this? It's because we see that this is a great potential market, and a business owner is a business owner. We don't care if he runs a business, whether he runs a computer business, whether he runs or a plumbing business. A business owner is a business owner, and they want to work just as hard as anybody else. Like I said, whether they go to work in a suit and a tie, or whether they go to work pulling up their boots and overalls, it doesn't matter. Just as long as they're not doing more than 50% of the actual manual duties, which most business owners today are not doing. So we think it's a terrific opportunity in that biggest market. Medical underwriting is very important. Obviously, we want to know their medical history. But the things that most common that are causing hiccups for us, not to say that we won't write them, but mental, nervous, muscular, skeletal type of things, stress and anxiety. We don't write for depression, but most of the situations we share are stress and anxiety related. Diabetes, blood pressure, cholesterol, these are things that are important, so we get this information from attending physician statements and many times our lab work, okay? But financial underwriting is important, If they make over $150,000 a year or buying more than $4,000, this is where we're going to require some financial documentation. Not very hard to get. Most people do their taxes online, or not online, but they do electronic type of submission. All we have to do is have them approve and give us that, just send us the email with all their financials. And that's as easy as it is, because one of the things that we protect income. And all we're asking to do, and I don't think it's an unreasonable request, is to validate what you make. If you say you make $140,000, can you just prove it just a little bit? Show us where you're making it, okay? That's all we're asking. And so it's not hard. When we talk about opportunities in the marketplace, though, there's a couple of things that we do, and not only with the new business owners, but our multi-life sales opportunity is by far something to really get excited about. And what we're looking for is 3 individuals who work with the same employer. Now, they don't need to know each other. They could be people who know each other. They could be working in the same building, or it could be 3 people with ABC company working in different locations within the city. We don't care. If you get 3 individuals who work in the same company, we will give that group a 20% multi-life discount. This discount is off of our unisex discounted pricing. So when you look at the marketplace, it's a very strong product for female market, okay? We also do supplemental buy-ups above group. About 90%, 85 to 90% of the applications that we work with in our Midwest region just alone are supplementing group long-term disability income. And we offer those on a simplified underwriting, 48-hour turnaround, or in many cases we do it on a standard issue. There's no underwriting, okay? We do business in up to 20% association approved discounts, or if you're working with a professional association where the individual association is made up of dues-paying members, not companies, but members, we'll consider that for an association discount. You give us a call, we'll help you do that. The DI Retirement Security is a product that protects and ensures an individual's contributions to a retirement plan. It's a DI Retirement Trust product. And I bought mine when we first came out with it. It's a great way to say, listen, if I became disabled, I've got all my individual disability, I've got my group insurance to pay all my bills, but what about my 401k? You know, most people think, and not only 401k, but my pension and everything else, that all ends when my earned income stops. And about 64% of participants in 401ks today think that if they become sick or hurt, that the company is going to continue to make their contribution to the 401k. I don't know where they got that information, but your customers think this. So they're out there understanding and thinking that something's going to happen that won't happen. So you need to have that conversation with your customer. So that being said, I think I did it in the allotted amount of time. There's my information. You got my phone number, my 800 number, my cell phone number. Is there a way, Tim, that we can open this up for questions for individuals today?
Sure. Yeah. If anyone has a question, just go ahead and let us know.
I don't know if is it still on mute?
Not anymore.
Okay, good.
I'm not seeing any questions at this time, but we can always address those at a later time if you think of something after the webinar. Well, I think I'll, unless somebody has a question, I'm just going to go ahead and wrap up here. Again, thank you, Rick, for giving us some terrific information and some really helpful sales ideas to take away with us today. If those of you on the call do happen to think of any other questions or need any help with product questions, sales ideas, supplies, illustrations, anything of that nature, please don't hesitate to give me a call here at Financial Brokerage. Our toll-free number, again, is 1-800-397-9999. And, and by the way, if you're not currently contracted with the principal, we make that very quick and easy for you. Just visit our website, which is financial-brokerage.com, and you can click on the contracting tab and contract online. And it only just takes a few minutes. But again, thanks, Rick. That was a terrific webinar. And thanks all of you for joining us today, and happy selling for the rest of the week. Thank you.
Thanks.